you point out in the credit markets, the wreckage in private equity and credit continues to accumulate. Wreckage is a big word in my world. So what do you mean by wreckage?
The loss rates on many of these assets, Carol, and thank you for having me, is quite astounding. Remember that you had not just big private equity firms diving into private credit, but you had retail firms selling this to individual investors for the past couple of years. I think it just speaks to a decline in standards in the investment world. I've been an investment banker for 30 years, member of FINRA, and I gotta tell you, most of my astute clients, the banks I really have respect for, don't see anything that they like. They're using the private markets to lay off credit risk. They're selling assets to raise cash. And I think that's frankly very consistent with what Jeff Gundlach is saying, which is that there's so much out there that needs to be fixed, and the loss rates could be rather considerable. So I think it's only getting started. You saw the story on Bloomberg this morning about Blue Owl.
Yeah.
We're going to see a lot more of that. So, just take that example and multiply it across the entire spectrum of private equity. One of the interesting statistics I saw in the last couple of weeks is that something like 2/3 of the existing private equity firms are never going to be able to raise money again because the losses on their portfolio are so profound. So I think we're seeing something episodic. And as Gundlach said, this is a commercial story this time. This is not about consumers and mortgages. This is purely institutional.
So the question I have is how it manifests. And do you believe it manifests in some sort of crisis? Does it become something that is systemic and has an effect on the entire financial system? Is it that big of an issue?
It is that big, but remember, this is institutional investors. So a lot of it goes on behind the scenes, lawyers and bankers sitting in conference rooms trying to figure out how to extract value from a situation. So when it impacts a public company, yes. When a bank has to fess up about a loss, we just saw one with Blackstone, a telecom company, which is going to cost them $150 million. Looks like the whole thing was a fraud from the word go. But over time, yes, you're going to see more disclosure from the public players, but the amount of loss is going to be much larger than what the typical investor, the typical media person actually sees, because so much of it is private. I'll give you an example. There's a really great publication called The Real Deal that covers commercial real estate. They can't even begin to cover all of the things that are going on. If you just read their headlines every morning, you get a sense for just how much restructuring there is going on in some pretty important and well-located assets here in New York City and other cities around the U.S., and it just continues. And yet the funny part is you have new investors jumping in to buy these assets after they've been marked down, thinking that they're getting a deal. Well, we'll see,
Well, we will see, right? I mean, does the AI spending frenzy play into this?
Oh, very much. I covered Silicon Valley for years, Carol, as a banker.
Right.
And I have a lot of respect for real technologists as opposed to salespeople. I don't think AI, as it's described to most investors today, is going to amount to anything except the convenience for consumer users of the internet. When you talk about real intelligence on the part of a machine that is based on its ability to observe and integrate new information, that's not what we're doing here. We're simply taking existing language, existing words, and putting massive horsepower behind search.
Okay, so
they summarize the first page of Google results. That's it.
So to be fair, to make sure I understand this right, you're arguing that what we're seeing right now with LLMs such as ChatGPT from OpenAI and Claude from Anthropic, that's the extent of the innovation that we're going to see when it comes to the investment in AI?
The head of AI at Meta, who's a really smart man, I was watching some of his videos yesterday over the weekend, and he just dismisses this entire phase. And I understand what he's talking about. I used to cover companies that did what we called natural language processing, where we were trying to teach computers words and then be able to integrate those words. We're not even doing that with AI. We're just simply throwing muscular search at it and saying, okay, what's the top 10 search results? Let's build a summary. That's not intelligence. So I think a lot of the spend, and you've heard this from other people, is going to end up being wasted when it comes to AI.
That's a lot of money, and that's a lot of big bets that, in your view, will not.
Don't get me wrong. I've made a lot of money on NVIDIA.
Sorry, go ahead.
Yeah, well, I don't think it will generate revenue proportional to the spend. Let's put it that way.
So. Okay, so
I made a lot of money on NVIDIA. Don't get me wrong. And I love that stock. I love the company. But I think, the desire for investable assets has just overwhelmed these opportunities. We see inflation everywhere we look in the financial markets today. And that is defined as too much money chasing too few opportunities.
I want to push back a little bit, Chris. I've been talking about this piece that was on 60 Minutes last night about the founder of Anthropic.
Yeah, Dario Amodei.
Right. And he talks specifically about how AI in healthcare. And I've talked to doctors too. We just did, actually, even on Friday, we were at Boston Children's about the use of they can't keep up to date on everything, and that how AI can data points and so on really come together to help create in terms of diagnoses, treatment, and also in terms of innovation. But Amadei's saying on 60 Minutes, basically he's talking about this thing of condensing basically let me just look what he says. The compressed 21st century. That's the phrase he uses to describe what could happen. He says the idea would be the point that we can get AI systems to this level of power where they're able to work with the best human scientists. Could we get 10 times the rate of progress and therefore compress all the medical progress that's going to happen throughout the entire 21st century in 5 or 10 years? I realize it's his book, but I mean, those of us who've started playing around with it are kind of blown away with it in terms of what it can do. But again, do you think it's just a productivity tool or something more that maybe creates?
At this stage, yes. Remember in the old days, Ray Kurzweil was one of the early advocates of AI, and he said, well, it's not intelligence, it's simulated cognition. And he was right. But then he had so many people throwing money at him to go to conferences and speak that over time he adopted a more liberal, more, I guess, accepting view of this technological phenomenon. But to me, as a writer, when I use AI, I use Google, for example, it's nice if you know what you're looking for specifically, but I'll always ask the machine 2 or 3 times the same question, differently worded.
Yeah.
And you always get different outputs. So let me give you another example. Imagine using AI for a mortgage lender to deal with customers who are calling, for a variety of reasons, and you want to use it to try and sift through those inquiries, answer the ones that you can in a reliable fashion, also use it to do summations of phone calls that have to be reviewed and okayed before they're, finalized, right? These are all valid functions, but ultimately all we're really doing here is summarizing, and that's what computers do. They sort, they do summations and averages and everything else, but it's not intelligence. It's not the ability to learn on the fly, and particularly without a monitor and a companion, if you will, in a human sense. So for a lot of companies, they look at the horsepower, they look at the speed and the robustness of these AI tools, right? But they don't quite get there in terms of rolling it out because of the high error rates.
Well, so
that's the thing.